doing a little analysis on counter trend trades. Counter trend trades would be um, something like this. I'll show you. Um, I take a lot of trades that are similar to this, where let's say it goes up, okay, goes up, whatever, but then it hits an area where I'm kind of interested in shorting, and then it goes down a little bit and then comes back up. And essentially, I'm shorting this high for the chance to make it go down. That's a counter trend trade, in my opinion, and this is what's qualified in my language. It would be PE, protecting extreme, which is right there. Um, and sometimes I have my stop like right here instead of at the high, which would mean it's tight. Whenever the stop loss is tighter, um, that's what it would be called, because it's usually its default should be at your stop loss should be at the high, that distal line. But sometimes I squish it inwards, and that's what's called tight. And then end of trend is a symbol, or is a trade that's called. Anytime it's counter trend like this, it's end of trend, and I'm predicting that this isn't the end of trend, and then it's going to continue lower, and we see some good movement there. Okay, it could continue up after that, but then I'd be out by then. That's capturing a 3, 4, 5 to 1. So, how do these trades do generally? And I have my optimizations here. I got 677 trades, of which only this many have these traits, any of these traits. That's because I don't always label all of them PE tight. Sometimes I use the PE. So I think it's really interesting. So out of that many, we've got 210 that meet this criteria. So a lot of my trading does consist of this, and I think this is good to see how it does. So let's take how far these trades go. I'm taking all the furthest it goes and putting it into my optimization, which tells me what's the win rate at each risk reward. Okay, so this should be probably the most trades I've ever had in here. Okay, good. 220. Does the chart go till 220? That chart only goes till here, so let's raise this chart all the way down to 220. Okay, just to 220. So there you go. Let's do that to all of them. Oops. There you go. 220, please. 220. This one. 220. And what this chart tells us is just the profit at each risk reward. This is the net profit loss if you risked $100 each trade. Does it win? Does it lose at a 3 to 1? Does it win? Does it lose at a 4 to 1? As time goes on, all of these trades. And then the table above will show us the win rate, which I'm eager to see. It's obviously it's not looking all that good. I can tell you that. All right. So here we go. This is it. So 210 trades. We have a break even win rates right here. You can see that we sneak. Actually, we're underneath on each one. So this is the expectancy on $100. We expect to lose $2 at each trade. For a 1-to-1, we're supposed to be above 50%, and each and every one actually isn't good. So each and every one, this is showing zero edge, and you can see from the chart it's flat and down. dependent on the risk reward. So a 10 to 1 is obviously the worst. 5 to 1 is better than a 4 to 1, 3 to 1, or a 2 to 1. But still, it's not good. It's all flat. This is not. These aren't good trades. This is what it's telling me, and maybe we have to dive in deeper into exactly which trade it is, which trade is causing it to be like this. This is the entire bundle. I'm trying to capture a wide filter, everything that's end of trend. Everything that's similar to end of trend. And we see that it's not ideal. It really isn't. So now I'm going to show in trend. I want to show in trend. So these are all, 677 trades to choose from. Now I'm going to do something in trend. In trend would be qualified as protecting free space. Okay. Anything that includes protecting free space means that there's bars behind it that it's trying to get there. And I want it protecting free space, but I don't want it end of trend. So we can do end of trend, and if there's some that are end of trend, and that would be qualified as 2. But first, I want to take a look at this. So let's take it, for example, protecting free space and end of trend. If you look at that chart, and I'll show this right now, this is what it would be. Okay, see this blue line? This is protecting. I'm in the higher time frame like area. I want to sell. I sell short, and let's say that this happens where it's keeps on going up, and now boom. See that? This is now free space. My distal line can be here, and this would be qualified as end of trend because the trend is dramatically up, and it's probably been continuing up. And now it's, instead of my high being my bounce, my end of trend bounce that I'm going off of being so micro and narrow, now we've got an actual larger candle, which the trading world calls engulfing candle, that we can run off of, and I think that may change the optimization here. So I'm going to test that. So when it's protecting free space and also end of trend, do we likely see that downfall that we're looking for? So end of trend and protecting free space. Sum of 2. There we go. How many are in there? We've got 64 trades. So it's still a sample size. 64 is a solid sample still. Even though there's a lot of noise in data, but still a decent enough sample size. Let's delete all the other ones. Good. So about 64 trades, and you can see that it's really volatile. So what's going on here? Out of the 64, we've got 5 to 1s being absolutely profitable. I mean, we got a 20% win rate when it's supposed to be, 17% break even. That's solid. But we're not profitable at 1 to 1. We're not profitable at a 2 to 1. We're break even at a 3 to 1. But then when a 4 to 1, barely profitable, and then the 5 to 1 starts kicking off and starts winning. So this tells me that the near side is not profitable. However, once you turn that 3 to 1, once you get past a 3 to 1, you can start seeing profit. So in this case scenario, when we see this happen, what's it telling me for future case scenarios? I'm going to see this happen and be like, okay, well, we're not going to go for a 1 to 1. We're not going to go for a 2 to 1. We're not going to go for a 3 to 1. We're going to go in that end zone area for 4 to 1, 5 to 1, 6 to 1. That's what we're looking for. Only on cases when it's end of trend, protecting free space. You know, when it's protecting free space, yes, it's at the end of the trend, but still protecting free space. That's when we see some serious movements downwards. I think that's important to note. I already have that in my head now, but so I don't have to write it down. But that's for sure. When I see that protecting free space and end of trend at the same time, we're looking for further targets, and thus we can risk less. Further risk rewards, we can risk less. All right, let's do in trend, because I was gonna do that earlier. Clear the filters. Okay. In trend would be either IT in trend. I don't know if I-T. I never did that, did I? Yeah, I didn't. Protecting free space. When it's protecting free space, and then end of trend, not end of trend. So you can't be 3. So it can be 1, 2, but not 3. Okay. So when it's protecting free space or deliberately in trend, this is what happens. Nope, sorry. No. I don't want it. And sorry. Clear filters. End of trend we don't want, so we're going to filter on end of trend, and we're going to make it 0. No end of trends, because that would be counter trend. And then we can have a sum of, this can be 1. Oh shoot. Yeah, now we can have a sum of 1 or 2. There we go. Cool, makes sense with me. Now let's grab these. How many trades? There's 291 protecting free space trades. A lot of trades for me. This is not always like in trend recency, because we're not doing any recency filters on it. That means we can probably, that means if there's a zone, let's say a zone's right here underneath this local distal line right here. This is my zone buy. That would be qualified as in trend because it's protecting a certain amount of free space underneath. So if it goes all the way down, I'm still gonna buy there, because it's protecting free space. So this is including a lot of zones. This is not like momentum trading, like holding level creation, where it's like it's going up bases and then you buy now. You buy there, put your stop loss at this low, and then it rips a little bit, and then you've just bought that, and you're holding on. That is what I actually want to narrow in on. So how are we going to do that is we're going to take recency. We're going to take a recency filter on it. So recency of 1, 2, recency of 2, 1, maybe recency of 2, 3, and that's it. That's the most we can do on recency. That would be qualified as in trend. And then what else? What else makes me think it's going to be a recent entry or something like this? Not like this. Not like this. I want something that's recent entry, in trend, protecting free space. That's it. I think that's it. Yeah, okay, so let's do it. End of trend, we have it at 0. We don't want any end of trends, and then we can have any of these. We can have in trend, protecting free space, recency. Actually, we need these to be we need it to be 1 or all of these. So if you do these, we need 2 and above at this point. A sum of 2 and above. Okay. A sum of 2 and above. There you go. There's the sum, and then do in trend. I want to do this. Sorry. In trend. Just there's only a few because I just started this. In trend, bro. This doesn't say in trend. Oh boy. Okay, doesn't say. Alright, now I can't use the word it. Interesting. Can't use the word it. One. Whatever. I'm just going to grab the risk rewards that I have here. And we've got, right here is for sure an it, right? So we got 1. We've got 2, 3, 4, and 5. We got 5. Bring this here. I'm gonna find the data. I almost done. I want to find this. Okay, here we go. Now end of trend is at 0. Good. Now it can be blank here. Now we've got recency, so it needs to be a 2. All right, so now it's recent and protecting free space. That's what we need to see. And grab these. Recency and protecting free space. Grab these. Boom. Grabbed them. Put them in optimization. Good. And then also, I want to grab the oh, this is the wrong one. Yeah, there you go. Grab the sum of 1 and see what those look like, because this is the population that we don't have yet. And it's protecting free space, so I like that. But we have to remember, anytime it's doing end of trend, we have to put end of trend there. All right, so end of trend's got to be there. This is a big trait. End of trend versus in trend. End of trend versus in trend. We're going to start doing that in every single category as much as we possibly can. So end of trend, or I'm going to write that down for my echoic memory in there. End of trend versus in trend. Okay, that's what we want to see. All right, let's do it. Yep, these are including breakouts, protecting free space. This is all good stuff. What's an R score? Hold up. I don't know when R score is. Is that early onset? I don't have R score listed. X score is the magnitude. I think I was doing R score. That was before I said it was R. Yeah, that must be it, right? I don't know what R score would be. Whatever. I'm gonna grab all these as well, because these are all, they're breakouts. They're good stuff. Protecting free space, my friends. How is that a 1? Where's protecting free space? Like this one. This one right. This one right here. How is this one protecting free space? It's not. It's not. What's going on then? One right there. 1 on K. Recency of 2-3. Okay. All right. I'll show you. And then just do this of 0. This of 0. This of 0. So that means just protecting free space. There you go. Yep. Oh my. And then we have to say anti-breakout. We can't have anti-breakouts. Because anti-breakouts specify the trade that it's anti, so it's an anti-protecting free space. Okay, so that would be qualified as an end of trend. Anyways, here we go. Yeah, this is perfect. These are all in trend. This is as best as I possibly can do it to make it in trend. So in trend zones, recent in trend zones, as well as in trend in trend breakouts. So this is all in trend. Let's see this. So there's about 279 trades. 289. Let's put the charts at 289. A lot of samples. That's good stuff. Good stuff. Good stuff. All right. Man, we see some volatility. It's not looking all that good. I think there's one more. No. There. Okay. All right. So there's some profit. The charts go kind of spread out. You know, a higher risk reward, like a 10 to 1, is way lower. Gray is a 0.5 to 1. So those are opposites, and they're both negative. What we want to see is that purple line looks the least devious. It's purple. Purple's a solid 2 to 1. Solid 2 to 1, which is tied with a 4 to 1 with that blue line. Oops, we got to put that blue line that got left behind a long time ago. 289. There you go. So the blue line's actually the most solid, which is 4 to 1. It's still very volatile, like green though. You might want to stay with the purple if you don't want some big loss streaks. But we'll see. I mean, both of them are good. Both of them have an expectancy of $8 per. So in that regard, you always go with a 2 to 1 instead of a 4 to 1. Why? It's because they have the same expectancy. They have the same expectancy. Okay, when they have the same expectancy, nothing else matters except win rate. Because how often do you win? It's just they end up in the same spot, but one of them's steady while one of them's up and down and then ends up in the same spot. You'd obviously want the steady one because then you don't have to suffer through so many loss streaks. I mean, you'll still suffer. A 2 to 1, you have to be, I mean, it's 36% win rate instead of a 22% win rate. So you're still going to suffer through loss streaks either way you go about it. But definitely it's a solid spot to be for a 2 to 1. So this is a lot more profitable than counter trend trades. So that's interesting. That is very interesting. So that's interesting. Wow, 2 to 1. So 1 to 1's profitable still. Man, I always go for 1 to 1s when we're doing this because I just think it's gone too far. It's gone up, you know. So in trend trades, you know, I just think they've gone up. So it's like up. Oh, we buy, boom, we buy, and then it rips. I get out at like 1-to-1, but these things run 2-to-1, 3, 4-to-1, and then they can do something. It's like I always think it's gone up too far to continue holding onto the trade, but this tells me that it is safe to hold on to these trades. Counter trends, this has a better risk reward, better expectancy over time for a 4-to-1 than counter trend trades, which is selling up here for a higher risk reward. I would think the opposite. I would think that this one would be obviously better for a further risk reward, which it is. It is better for a further, but if you put the counter trend trade to the in trend trade and compare them to each other, the in trend trade is actually even better than the counter trend trade at these far risk rewards all the way up there. So both of them I should be going for further risk rewards, number one. Number two, my in trend trades should probably be weighted more. We should probably be having more money on the line on my in trend trades than my counter trend trades. This makes sense. I mean, it's pretty self-explanatory and not self-explanatory, but like commonsensical that in trend works better than counter trend. But hey, I didn't know until I see the actual data. And 1-to-1s in either category aren't the move. 4-to-1's the move, or 2-to-1's the move. Sometimes a 5-to-1's the move. So a lot more, and 3-to-1 is not that good either for in trend, which is what I usually would go for if I'm going to go for a further risk reward. So don't be afraid of the 4-to-1s. This is what this tells me. In trend is positive. In trend is much more positive, and then protecting free space matters. And then I just wanted to show what else. Yeah, that's it. That's pretty much it. End of trend is more negative, so risk less. And then go for 4-to-1s, 2s, or 4s for in trend. So minimum go for 2-to-1 in trend trade. Super quick before it's over, I just wanted to point and see, does protecting free space matter? Okay, this is important. Before it's over, I just want to do protecting free space of 1. Okay, protecting free space of 2. Protecting free space of 3. Okay, first and foremost, let's go ahead and look at protecting free space of 3 and see how far they go. Let's see if these matter. 95 protecting free spaces of 3. This is really good. I want to see if the size and the magnitude of these free spaces matter. And what this means is almost done. What this means is if you're long and then the zone is there and then it's up and then it comes back down, this is your zone, your entry line, your stop line. This is the free space. This would be protecting free space of 3. And I will tell you that this is protecting free space of 2. It's protecting free space of 2 because it's not protecting much. That's actually 1. A 2 is in the middle of that. Okay, so essentially, huge monumental free space is protecting free space of 3. There's much less of protecting free space of 3 than they are of 1. So I would only assume, my hypothesis would be that this is awesome results in protecting free space of 3. And clearly it is. Oh my. So only 95 trades. We've got a $14 expectancy on 2-to-1, 22 on 3-to-1, 26 Oh man, so 3, 4, 5 to 1. These are money. So this just tells me right off the bat that protecting free space of 3 is money. Is money. We want to go in that 3, 4, 5 range. That's that bubble that we want to see. Maybe 6 to 1 sometimes, but that's the bubble we want to see, and we probably want to double risk on those, even though we're more likely to lose each event. However, if we have always the same risk, you're just raising the expectancy. You're just raising the amount you can make. That's solid. That's awesome to see. So protecting free space of 3 is great. Now we got to go into protecting free space of, let's do 2. Let's protect free space of 2, which is probably the most common. Probably the most common one. And there's 91 again? No way. How is there the same number? This doesn't make any sense. Now this is sketch, bro. What? Okay, 1. Okay, what about protecting free space of 3? 0. 91 trades. Sum is 242.75. Okay, let's see it. 242.75, 242.75, 242.75. There is 95 trades. Sorry, 95 versus 91. So we're actually comparing perfect apples to apples here. I'm excited to see this. Protecting free space, does it matter or doesn't? Let's take a look. 91 trades. Throw in the optimization. Delete these. Let's take a look. Right off the bat, it's profitable. This time, protecting free space of 2, you're closer. The area you want interest in is, wow, essentially 2 to 1 all the way to 10 to 1 is solid, consistent, robust profit. That's money. That's what we want to see. 2 to 1s. So protecting free space of 2. 2, go for 2. Go for 2. 2, 3, 4, 5, 6 plus. Go for 2. That's awesome. So that's what we see. And then protecting free space of 1 is likely going to be, I would think, less profitable, but we'll see. How many? There's 133 in this one. 133 samples. It's a little bit more common, and you see that it gets a lot less profitable the less free space you get. So free space, that spectrum, is a trait that we really need to pay attention to. You can see the results are clear. You're just going for a 1-to-1 on those protecting free space of 1. Going for a 1-to-1. Okay, so that's some good data analysis for our trading. We're going to take it into the trading day, and we're going to base our judgments and trades off of this. Instead of doubling because we're confident, we're doubling because it's protecting free space of 3, and we're confident that it can go for 3 to 1, whatever, 4 to 1, and it's in trend. That'd be great. So, all right. That's it. Peace.